Scott Bauer. Two trades, Scott. You can go with the long reopen and streaming sort of buffer that they have, or you go short on the reopen and the parks that they need to really drive the stock. I mean, it seems this week we saw how important those parks are, right? The fact that we ramped up to $140. So where do you think the potential here, Scott, is coming into the earnings to make money trading?
Michael hit the nail on the head. He really did. And when the street, when I say, investors look at numbers and they look at the earnings reports and they hear the commentary coming from Disney, they don't like lumpiness. The market doesn't like lumpiness. And I love that word that Michael used. And I think that's what we're going to get. That's what we're going to see out of this earnings report. And to me, that's a big negative. It's a short-term negative, but it's a big negative. Yes, streaming, thank goodness, that, like, as you said, Oliver, that has saved the stock, quite frankly, over the last 6 months or whatever it is. However, I think there's going to be some question as to profitability, as to margins, and this, that, and the other. They've done an incredible job ramping it up so quickly to offset, obviously, the losses from in-person attraction and in the parks. But I just think that we're going to get a lumpy report, and that guidance may not be so great. And I'm looking at a downside play here on the report. Longer term, I am bullish Disney, but that's down the road, 3 months, 6 months, 9 months. So what I'm doing, I'm buying a put spread. Not expiring tomorrow. I want to give this a little time. So this is expiring next Friday. I'm buying the 135, 130 put spread. To buy that for $1.50, maybe even less right now. The stock has rallied just a little bit here. And I like that. Listen, if the stock, goes up, if it catapults up, I know what my risk is. I'm always risk defined. But I think right now there is so much pressure on this report that there's a lot more headwinds than there are tailwinds.
Okay, so the move that the stock needs to 133.50 for you to break even would pretty much put us down towards the kind of highs from the summer, August, September. You're not looking for a collapse, but you're looking for a pretty healthy sell-off here. I mean, you need this thing to drop fairly quickly over the next week.
Absolutely. And, right now the market is pricing in just on a one-day move, just to tomorrow, of about $6 or so, almost a 5% move here. So we could see that. Obviously, that's either direction. It could be up or down, but that's what the option market is pricing in. And listen, if this thing does drop, I want to take advantage of that because I would be a buyer of Disney around the 130 level. Okay.
All right. So you look for Disney to drop, make money on the trade if it does, and then potential to buy on the other side for the longer term. It's kind of would be the sweet spot for you to hit, Scott, if you like it long term, dislike it short, betting on a drop here. Appreciate it. Scott Bauer, CEO of Prosper Trading Academy.